Welcome back to today's Daily Crypto Market Explainer. We're zeroing in on the data for day 239 today, and honestly, a really clear narrative is emerging from the numbers. We're going to unpack exactly how PLAZM is demonstrating real mechanical resilience despite the broader market's emotional descent. You know, when the market gets shaky, we don't guess, we just look at the data. And today, the data is telling this fascinating story of a protocol standing its ground. So let's get right into the macro context.
Overnight, we saw a pretty sudden shift in market psychology. The Fear and Greed Index just spiked 4 points, moving from 30 up to 34. That represents about a 13% sentiment swing in a very short window, signaling a deepening caution across the entire crypto landscape. We are firmly in the fear zone right now, though, not quite at extreme fear. But this is definitely the psychological backdrop we're working with today.
But when we actually look at the price action of the majors, things look, well, relatively calm. Ethereum gained a modest 0.58%, bringing it to $2,125.87. Meanwhile, Bitcoin essentially just hovered flat, up a tiny 0.03% at $77,388. So while these major assets are relatively calm on the surface, that underlying market sentiment, it's deteriorating rapidly. People are getting nervous even if those top-line prices aren't collapsing quite yet.
And this sets up the exact stress test we really want to observe today. It's a fascinating contrast. The broader market is reacting with emotion and caution, but PLAZM's automated systems, they run purely on math. This is typically the exact moment where traditional DeFi protocols start to weaken as users panic. But today, we get a front row seat to see if PLAZM's anti-fragile thesis actually holds up under real market pressure.
All right, let's dive into the pricing data because it shows remarkable stability for both PLAZM and eSHARE on a day when fear is literally driving the narrative everywhere else. PLAZM gained a nominal 0.07% to sit at about a penny and a third, $0.0132. eShare tracked up 0.32% to $5.99. Neither asset collapsed, neither soared. They're just showing complete coherence. Consider this. Ethereum's slight gain is nearly 8 times the move we're seeing in PLAZM here, meaning PLAZM effectively held its own and totally neutralized that broader sentiment pressure.
Section 1. Vault and Bond Accumulation.
So despite that sudden spike in market fear we just talked about, the PLAZM vault actually grew. It added nearly $2,500 in USD value, $24.77 to be exact, which is about a 0.5% growth, bringing the total vault value up to $496,880. And in terms of the underlying crypto, it's holding strong at a steady 233.81 ETH. It's essentially flat in ETH quantity, but totally positive in USD terms as the broader market stabilized.
And total bonds accumulated? That ticked up to 14,172. That is an addition of 48 new bonds in just the last 24 hours. The protocol is out there still deploying fresh capital to lock in these new bond positions, entirely unaffected by that 4-point fear spike.
This steady growth is fueled by a consistent daily compound yield of over $800, specifically $804.44. Now, the bond APR did slip a tiny bit, a marginal 0.41 percentage points, but it's still maintaining a very strong 59.08%. This means new entrants today are getting near identical yields to yesterday, completely bypassing all that emotional descent in the broader market. At a bond price of $35.07, the math just keeps working.
So, the absolutely crucial point is this: how does the protocol keep growing when market participants are scared and sidelined? When fear worsens, naturally, fewer new users enter, which reduces the eShare inflow pressure. So why didn't the whole system just stall out today?
Well, the answer lies in the buy, burn, and build, or BBB engine. It automatically deploys capital across 3 different pools without a single drop of emotion. The BBB engine doesn't care about sentiment, it simply runs on yield math. If we look at the breakdown, the buy and burn pool has spent over $86,000 over its lifetime to permanently remove supply. Buy and build has spent nearly $31,000 to feed liquidity. And sitting right there ready to activate when tomorrow's yield hits is about $3,300 in USDC reserves.
Just zeroing in on the buy and grow pool specifically, it automatically reinvested 20% of yesterday's yield to quietly purchase 4.59 new bonds today. This is automatic capital deployment at its finest. It happens whether the market is greedy, fearful, or just completely asleep.
And here is the direct result for the stakers. Lifetime claimed profits just crossed $144,439. That's a jump of over $700 in a single day. Actually, over $1,000 worth of value. That's 82,656 PLAZM tokens was paid out just yesterday alone. Even as sentiment deteriorates globally, the yield distribution to stakers remains, well, entirely mechanical.
Moving along to Section 2, Token Distribution and Forecast.
Let's take a look at what is probably the protocol's most underrated feature. Out of the 15.08 million total supply, a full 20% has been permanently burned and removed from circulation via that buy and burn pool. Another 7% is staked and earning yield. 11% is providing depth in liquidity pools, which leaves 62% liquid for trading. That 20% burn, it's a permanent supply reduction that just quietly compounds daily, acting like a mathematical floor during bear markets.
Looking ahead, the release calendar shows completely clear skies for the next 7 days. That means zero scheduled sell pressure, literally zero PLAZM scheduled for release over the next week. Why does this matter to us? Because the fear that drives small holders to panic sell today won't be compounded by any massive scheduled supply unlocks. It gives the BBB engine a clear, totally unobstructed runway to just keep accumulating bonds.
Which brings us to Section 3, the anti-fragile verdict.
We are seeing a clear, undeniable divergence today. On one side, a 13% emotional deterioration on the macro side, represented by that 4-point spike in the fear index. And on the other, it's countered directly by tangible, mechanical growth on the PLAZM side, with the vault growing by roughly $2,500 and snapping up 48 new bonds.
And that perfectly captures what we're seeing right now. This is anti-fragile in action. Fear worsens, but the fundamentals compound steadily. The systems built into PLAZM are doing exactly what they were mathematically programmed to do, proving for sure that the protocol's design works under real market pressure.
So I'll leave you with this final thought to ponder as we watch these mechanical engines continue to quietly compound. As the market continues to let fear dictate its moves, how much stronger will these automated anti-fragile mechanics become before the tide finally turns? When the market inevitably cycles back from fear to greed, what does a permanently reduced supply and a highly accumulated vault actually look like? Thanks for joining me for today's explainer, and remember, stay focused on the data.